Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss Nasdaq 100 sector performance following a record-setting first half of 2023. Mark, it's great to see you as always. Welcome back to Trade Talks. And as we can see from your first chart here, the first half of 2023 was quite exceptional. In fact, a record-breaking first half.
Yeah, thanks so much, Joe. Great to be back. And I know last week we kind of wrapped up the first half of the year talking about how strong a lot of the technical indicators have gotten for the Nasdaq 100 over the course of the year. Wanted to sort of continue that conversation and talk about where we really ended up performance-wise in the first half and what's happened so far this half of the year. We're now halfway into July. And then, of course, dig into some of those sector exposure analyses that you alluded to. So this first chart really tells you the story, right? The performance of the index, you see there in yellow, up just under 39% in the first half of the year. Best first half of performance on record, dating back to the index's launch in 1985. And you can see where that yellow line sits in relation to all these other lines, right? It's at the bottom. The top 7 names in the index all outperformed. And some of them incredibly so, right? We've heard a lot about NVIDIA, but it's always striking to me to just put these numbers up on the chart and then have to play around with the axis to get them all to fit. NVIDIA up almost 190% in the first half. Then you had Meta up almost 140%, Tesla up over 100%. And even Amazon had a really, really nice first half, along with Apple up about 50-55% apiece. These are massive, massive companies with $1 trillion or $2 trillion in market cap each. So they did really a lot of heavy lifting in terms of driving the index performance in the first half.
And what if we take a look at more recent performance, Mark? Are you seeing the same thing, kind of a mirror image there?
Yeah, so, heading into July, into this quarter in the second half, I think it was fair of a lot of people to think that the largest names would start to take a breather. That we would start rotating into, some of the smaller names in the index. In fact, there have been some pretty nice inflows into some of the equally weighted, the products that track the equal weighted version of the Nasdaq 100. This kind of broadening out of leadership, right? Not just within the Nasdaq 100 constituent base, but even broader market overall into things like the Russell 2000, small caps, and other sectors. And really, with the exception of Apple, which is down about 2% so far this month, as of yesterday's close, that hasn't been the story, right? There were really, really positive headlines just yesterday coming out for NVIDIA, as well as Google, related to AI. Tesla and Amazon continue to do pretty well. And so, some of these names were barely 2 weeks into the quarter. They're already up 6, 7, 8, 9%, which is really incredible. When you think about how big that run was in the first half of the year, that's propelled the index to already be up just over 2.5% month to date so far. And really kind of not showing much of a slowdown in terms of the momentum here, especially given things like the very favorable, macro news that we got this week around inflation cooling even faster, I think, than most people had started to recognize. Now we're down to a 3% annualized inflation number year over year versus about 9% where we were 12 months ago. Just an incredible slowdown there. And of course, that was the big driver in the negative performance last year, those fears around inflation and rates hurting growth, hurting large cap tech, just a complete mirror image reversal so far this year.
And finally, let's talk about sector performance. Where can we find that attribution?
Yeah, so when you add it all up, right, year to date, we're now sitting at about 43% for the Nasdaq 100. So when you split that into, when you look at the average weightings of the index by industry, you see tech there on the left at the biggest slice of the pie at about 59%. Consumer discretionary, which includes some of those techie sounding names like Amazon and Tesla, by far, the smaller of the two, but still a pretty big exposure at 19%. And then you see the breakdown of the contribution of that 43% return on the right-hand side. So 32 percentage points of the 43 came from tech, So even though it's a little over half of the weight, it's contributing about 3/4 of the returns to the index. And then consumer discretionary is contributing a little bit more, punching a little bit above its weight. And then you've got pretty much the rest, right? The remaining 20% of the index contributing virtually nothing, spread out across healthcare, consumer staples, and a few other sectors. So it's been a very concentrated story in terms of the sector drivers this year. It's been even more concentrated when you get within sectors, looking at those biggest names, really responding to, again, those favorable macro stories. The unfavorable macro development in the banking sector that kind of spurred that flight to safety trade back in March. And then also obviously AI, right? The new major secular growth theme, which I think people understand that the biggest names are best positioned to capitalize on that. But it's going to be interesting to see as we start to get numbers in the next earnings season from some of these smaller names to see if that trend in increased spending on AI tools and AI investment starts to feed through to some of the smaller names in the index and starts driving some of that catch up that many people are potentially looking for in second half. So that's what I'm keeping my eyes on.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.